Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show, episode 199. My name is Cyprian Francis, and with me, as always, the main man of the hour, Mr. AJ Brown. Good morning, AJ. How you doing?
I'm well. How are you doing, Sip?
Waking up, it's been slow all week, and then today it feels like we got a little bit of excitement in the market based off of some inflation information. I know that's something we discussed in the past. So, what are you seeing? What are you liking? What moves are we making?
I mean, that's exactly what we're seeing today is the personal income and outlays report was released this morning, and that has people thinking about inflation again. And it all comes down to what is the Fed going to do in September? I mean, that's where people's minds are. And so they're trying to guess what the Fed's going to do. The Fed is getting into this realm where they don't know whether to raise rates or lower rates. When you raise rates, it means you're putting the brakes on the economy. It's too hot. Prices are increasing too quickly. When you're, juicing the economy, trying to speed it up, that's what you do when, everything is slowing down. And what's happening right now is, we got a report last month that said employment was really slowing down. It was harder to find a job. It was harder to keep a job, that people are getting furloughed, people are getting fired. And then at the same time, we're also getting reports like today, everything came in as expected. In fact, I have the report right up here on my screen. So let's pull it up.
Yeah,
Um,
that was my quick observation versus the last inflation data was that it was all in line, but the market's reacting more negatively than in the past.
well, because, where not just the Fed, the Fed published back at, 5 or 6 years ago that they really wanted to see the economy growing at 2%, maybe 2 to 3 max, right? That's not just a number that the Fed pulled out of the air. That seems to, throughout history, keep folks comfortable and at bay and not complaining. So that's really where economies are doing the best, especially mature economies like the US economy, doing best at growing about 2% a year. Well, uh, even though everything came in as expected, it's higher, right? 0.4% in income growth, 0.5% in expenditures growth. I mean, that when you multiply by 12 months, I mean, that we're talking about 6%, right? Inflation when you extrapolate that over the year. When you look at the PCE price index and the core PCE price index, that's where we take out things like groceries and fuel prices, which tend to be kind of crazy month to month. So it tries to take those out. Although I have to say, when the price of groceries goes up, you and I feel it a lot. When the price of gas goes up, you and I feel a lot. And actually, the price of gas is at all-time lows right now. Not all time, but lows in the last few years. So it's the price of groceries that seems to be up because everything came in as expected. It's just high, Sip. It's just high.
And it kind of counters to the reaction from last week when the Fed governor basically said, "Oh, we might lower interest rates." Everybody hopped on that bandwagon, and you and I discussed that. Hey, we still got more data. This data isn't coming in. I mean, we've kind of known inflation has been up. It's just not reversing. Is I guess the storyline.
Well, and the scoop is and actually we haven't seen this to this quickly and this degree since the 1970s when I was a little kid. It's called stagflation, and it's where you have a problem with employment, but you also have prices going up at the same time. And that seems to be what's happening. And so the Fed has to make a choice. Which one is more important to deal with first? Is it the employment, or is it the the prices that won't come down? If it's employment and employment is suffering, which it seems like it is, then the Fed should juice things. In other words, they should lower interest rates in September, which, by the way, again, I'm going to bring you to the latest CME Fed Watch numbers. If we take a look at the Fed Watch numbers for September, I mean, it's almost a given that we're going to see a rate drop in September. Although when we go out to the end of the year, December, it's kind of up in the air whether or not we're going to see a second or even a third rate cut. So we're pretty sure that somewhere in October and December, we'll see a second rate cut. We might even see a third. That's where consensus of investors are. But again, this Fed is acting the way Feds are supposed to, reactively to what's going on. But I have to say, with this current new fiscal policy that we haven't really used for about 100 years, um, the Fed doesn't have anything to pull on, because although this fiscal policy hasn't, it was used 100 years ago, the economy is way different 100 years. We weren't doing the amount of global trade that we're doing now, right? Even stuff that is assembled here in the United States, there's parts that are in whatever we're assembling that were made abroad that are getting tariffed, right? So that's something that, it's raising prices, but it's also those prices that are going up because of the prices at the retail level going up, and we're seeing that happening, is making it's acting to slow the economy, right? So prices are going up, but the economy is slowing, and people are getting, axed or furloughed from their jobs. So yeah, the Fed has to make this decision, and it's a very difficult decision to make. I mean, when I grew up in the 1970s, it sucked, right? Mortgage rates were up at like 14% is how much it would cost for you to borrow money to buy a house. And no people, there was a lot of unemployment, and so the Fed is going to have to make this choice as to whether they want to juice the economy in order to keep employment going, or if they want to, try to curb prices that are becoming out of control. So the stagflation effect is definitely on people's minds. And that's why today, when the PCE was released, and it just reinforced that prices are going up at the same time that employment is going down, that stagflation is on the horizon, if not already here, it's causing investors to think twice. But again, look at the price action. Yes, prices are down today, but I mean, because it's where it was expected, it's down to where it was on Tuesday. It's like not a big deal.
Yeah, it's like we had the S&P, I think, hit a new high yesterday. I mean, just yesterday. So we're not seeing the follow through today based off of the economic news. But you're right. For the week, we've been pretty much, moving up, even if it's not even that much.
hmm And look at my drawing here. I keep track of support and resistance, and you'll notice that number one, my linear regression line, and you'd have to see a playback from last week. It's losing its vigor every time I readjust it. I keep seeing it going down and down and down, so it's getting less and less of a angle of attack. But also, notice that price is kind of loitering at this level of support. It's like if this was a horizontal channel, you'll just see price kind of living at that support and not going back up to resistance. That's not so healthy. And then if you look at it a little different way, maybe I have to take my lines back off of it. We're kind of back into this consolidation pattern. If you can see my pink lines on the screen, you'll notice that actually, if you look at the last month and a half of price action, our resistance level is flattening out. Our support level is staying quite aggressive. And, usually when you get that consolidation, you come to this pivot point, and then, it's your guess versus mine whether or not we break out up or down, but consolidations lead to breakouts. And typically, when you've got that upward flag pattern, the breakout is down.
And a good way to protect yourself is your VIX trade, right? I know that when we get a little bit of a kick on the uncertainty, we always reference that. I'm curious if you've gotten a signal and or follow through using our lovely free indicator, which I'll go ahead and throw the link to that in the chat for everybody. But are you seeing some opportunity in the VIX?
Yeah, definitely. In fact, I think that folks can still get into it. I'm tweaking my indicator. I like using, when it comes to entry and exit signals, even on the VIX hedging trade, I really like to use what I call my fast MACD. And so if people don't remember what my fast MACD is, it's a MACD indicator. And if you use the one that we download, it puts really nice arrows right on the main price chart. And at the same time, it also gives you a little bit more flexibility. One of the biggest flexibilities is what price do we calculate the MACD on? Usually it's the closing price, but if you want to take into consideration things like the actual volatility, you might do high low close divided by 3. Or one of the things I like to do is volume weighted average price. Now, in order to do volume weighted average price, you need to have volume. The VIX doesn't actually record its volume per se on its data feed. So we'll stick with the close. And then when I say fast MACD, those people familiar with technical indicators, you know that the regular MACD has settings of 12, 26, and 9. Those Appel, the father and son who, the father really thought up the MACD back in the day. And now, the son is out there with that organization that came up with the MACD, keeping the technology going. They have published papers over the years, and they have a even faster and a slower version of the MACD. So the fast version is where you change that 12 to a 6, you change that 26 to a 19, and you change that 9 to a 3. So it kind of speeds up it. Speaking of juicing, it juices the MACD, and it's kind of better for the type of trading we do for signals. So if I put my fast MACD on the VIX, you can see that I actually got a signal at the end of the day on August 19th. And then I got follow through last Thursday on August 21st. So if I get a signal end of day, because I'm an end of day trader, I'll look and I'll usually set my automatic trading algorithms, where if anybody's part of my trading trainer program, we talk about those a lot. I'll set my automatic traders to look for follow through the next trading day. And then at the end of that day, I'll basically evaluate whether a trade was placed or whether my automatic trading, robots found that trade or not. So on that Wednesday, I came back and the trade was a no-go. There was no follow-through. So I didn't see any reversing or canceling out signal that evening. So I set my automatic traders again for Thursday, the 21st. And sure enough, at the end of that day on Thursday, I had an open position on my VIX hedging trade. All well and good. As we know, last Friday, everything reversed, but it doesn't matter. My trade was placed. I was in it again. And yeah, this week, the VIX hedging trade kind of was a stall. I didn't get any exit signals. It just was like, this is a stall trade, which is fine, right? Trade your plan, right? The reason why I plan out my trade so well is so that I could then trade my plan. It's not so I could disregard my plan. And then today, it looks like we're getting another signal. By the end of the day, we'll have another signal to jump back in. So if you got in last Thursday like I did, fine. If you haven't gotten in yet, it looks like early next week you'll probably get some follow through days and you could do it again. The key is the VIX hedging. You want that trade to be in place every time you bounce off the bottom, because should we all of a sudden get that surprise situation like we just talked about in the S&P, that it's consolidating and that there could be a breakout. If there's a breakout down, this VIX is going to shoot up, and then our VIX hedging trade turns from a break-even trade into a big profiter to perhaps offset anything that happens in your portfolio as a result of a surprise move down in the S&P.
Yeah, and it's interesting the storylines this week where the quote unquote maybe firing, or I don't know if I can fire the one of the Fed governors, and that being...
In fact, I was looking at CNBC this morning. They're covering that trial. Let's see if it's still going on. They were covering that trial live. The Fed president who supposedly got fired is now suing Trump to keep her job, and suing the White House to keep her job. I don't see the headline anymore. Here it is. Court hearing on Lisa Cook's bid to block Trump firing of Fed governor begins. So that trial is in full effect right now.
And that's interesting because it goes to the storyline of the disassociation of the governor's board and their activities from what the White House wants specifically. And at the end of the day, we kind of want that as citizens, right? We want them to not be able to like go in each other's pockets and make changes.
It's true. Monetary policy is one of those things that, for the most part, should be reactive to what is happening in the economy. You know, the scoop is Trump wants the Fed to do something. The Fed is acting on the data. And so they may not be doing exactly what Trump wants. He's kind of, he's known to keep these vendettas against people, and kind of, it's almost a petty response. He's going after the Fed. Earlier in the summer, we had all these calls by him that he was going to fire Jerome Powell. Now he's firing individual Fed governors. But is it actually worthwhile? We know what's going to happen, right? So this trial is going on. We're going to hear from, the local court that Lisa is her name. Lisa has brought this to. Of course, if Trump loses, what does Trump do? We know what Trump does. He raises it to the next level, which would be the appeals court. And then he ultimately brings it to the Supreme Court. The Supreme Court is the only court in the land that can actually, set precedent. All the other courts, the lower court and the middle court, they in theory have to read the law, and then they're not allowed to put too much of their opinion in it. So they read the law, they interpret the law, and then they make a decision based on what the laws are. The Supreme Court has a little bit more flexibility in that if the law is vague, they can kind of set a precedent. So he basically, it's kind of his playbook. He brings it up to the Supreme Court. But, there was already a case earlier this year where the Supreme Court was, again, it was one of those things where Trump was trying to say, do I have the power to do what I'm doing or not? And for the most part, there's been a couple of exceptions, but for the most part, the Supreme Court has ruled in his favor. But in one of those rulings, and I can't tell you which case it was off the top of my head, but in one of those rulings, they actually said there's a couple of things, and they listed out the Fed that have to be on their own and not be political or not be connected to the White House. And they actually listed out the Fed. They listed out about 3 different organizations. They said, but in this case, you win again, Trump, because we think that you're okay. But they actually said, these are the organizations that you wouldn't be able. So it's already kind of been said. We'll see if it actually goes to them again, if they actually take the case, and if they actually now disagree with the notes that they put in the previous case, which who knows what's going to happen. But I think it's almost Trump's playbook to keep bringing things up to the Supreme Court and having the Supreme Court make the decision on whether he can, take over a particular organization or not.
I'm surprised it hasn't had more of a effect on the market or anything, in the sense that I guess if we do replace her, it'll be with somebody that wants to cut rates. I guess that's the assumption.
Well, you know, possibly, here's the scoop. If you cut rates, if the Fed cuts rates, it's because the economy needs juicing, right? It needs some pushing up. That's what I mean by juicing. Why would the economy need juicing? Well, it would be because whatever federal policy, whatever fiscal policy has been put in place, it's slowing down the economy. So really, Trump wants the Fed to lower rates, but he hasn't yet admitted that his fiscal policy is slowing the economy, because the economy was going good before he went in there. So if the rates need to be cut, it means that whatever he's done sucks for the economy, right? And I don't see Mr. Trump or the White House administration admitting that what they're doing slows the economy, but at the same time, they want the Fed to juice rates, right? So that's where it's kind of an ego thing, where he wants the Fed to do this for him, but he also doesn't want to admit that the reason why they should do it is because his fiscal policies, whether they're temporary or full-fledged, again, we don't know, because they haven't been employed on this type of economy. They haven't been employed in about 100 years. So, that's really what it comes down to. He wants them to do his bidding, but he doesn't want to take responsibility for, the reason why they would have to juice rates, lower rates, right? Juice the economy. So it's kind of a sore subject, at least with me personally, because, sure, make the case, right? Make it the case about why they should lower rates. Don't just like bully them and say lower rates. Why do you need to lower rates? It's because the economy's slowing. Why is the economy slowing? What's different? You're trying something out that, at least in the initial move, is making things slow down. It's making people not want to buy shit.
Yeah, very interesting. And I'm curious if the Fed could ever do anything like, yeah, we're lowering rates, even though we don't really want to. It's about time that we need to do it. We don't know if we'll do it again, but like for now, we think we need to bring it down a quarter basis point. Because I feel like certain industries are getting hit harder. Like housing, for example, is really feeling the effects of the higher rates over time. And maybe that could be a valid argument for, hey, we got to get housing back in order. But you're right. There isn't a good argument. It's more of like, I'm the president. You guys need to do this.
Yeah. And that doesn't fly. Yeah. I was listening to a person online who is from China, and I think she's trying to make it so that it's not about us versus them, right? It's like, hey, we're people too, you're people too, and we both believe in freedom, but our definitions of freedom are slightly different. In the United States, freedom comes from, the fact that we used to be part of the English colonies, and they were taxing us with a tariff on teas, and we got pissed off, and we're like, we don't want to be, ruled by a king. And so our freedom, we do what we want, every man for himself, get off our back, King George. And there was a revolution. And so built into our psyche as people from the United States is this idea of, hey, we're not going to be governed by the monarchy or a king, right? In China, if you look at thousands of years, they were always being run by these little militias, and the individual civilians were always being, used as pawns with these little warlords and these militias. And so freedom for them is the freedom to have to worry about, whether they're going to be pawned off or get caught in the crossfire between these little militias. So being under, a single rule and having the calm and the freedom to not have to worry is their freedom, right? So the Chinese people aren't like pissed off, right? That they're under an authoritarian rule, because it means that they don't have to worry about whether the Hatfield and the McCoys, they're going to get caught in the crossfire as civilians. They can actually just kind of like chill and not worry about that shit. So it's very interesting to get this idea about, you know, what is, freedom, what is, this and that. But it comes down to our economies and how they play differently in the world, and what the rest of the world is attracted to, and even what the individuals in our world are attracted to.
Uh, a great breakdown, and I actually wasn't really too aware of that Chinese historical history or storyline there. One thing we did touch on that was kind of in. Or go ahead.
No, I was just going to say, you remember the Fed has this secret tool that they use behind the scenes, which is quantitative tightening and quantitative easing. Well, I like to pay attention to their quantitative tightening, which is another way that they are slowing inflation, right? And so they are totally swamping the bond market by selling back their bonds. When they sell back their bonds and they create an oversupply, it kind of also is raising rates per se. So even though they could totally, their most popular and their most visible tool for managing the economy is interest rates, right? That's what everybody's talking about. That's what the PCE is all about. But they use this tool behind the scenes, right? So they could totally lower rates on the overnight interest rate, get all the press releases, everybody talking about how interest rates dropped a quarter point. But if they keep, flooding the bond market with these bonds from their IOUs, that'll almost cancel out the rate drop on the short-term rate. So they're playing some chess right now, and it's quite interesting to watch.
And I wonder if the president is even like in tune with that, because if that's the case, then that's good to bring that number down, right? Because we've covered that on multiple shows, that being an issue, and we need to get it under control. With markets at all-time highs, hey, this is a good time to start doing that action behind the scenes.
You can tell that they sped it up over the last 3 weeks. It was they were flat for a while there, just a little bit here, a little bit here, but just in the last couple of weeks, they have really accelerated their sell-off of bonds.
One thing that came up yesterday, we didn't bring it up on the show yet, was Nvidia earnings. Nvidia earnings always is a big market mover. Did you look into it? Did you get any takeaways from, because the numbers were good, I think a little bit under estimates, but the big storyline was they're not selling to China yet, and if they will, then that number is going to look a lot bigger in the future.
Yeah. Well, Nvidia is one of those 10 players. I would actually argue it's the biggest of those AI players in the AI. Everybody is piggying back on Nvidia for this new explosion, which is going to be artificial intelligence. And, with the projections are out there, there was the PC revolution when I was a kid. There was the internet revolution. This AI revolution is supposed to eclipse all of those. Our lives are going to completely change. I thought my life changed when I didn't have to go to the record store anymore. I could go on Napster. But, apparently that's nothing compared to, well, you use AI almost on a daily basis. And it's just in the last 6 months, the tools have just become, stellar.
Yeah, and they are essentially the infrastructure that we need to use all these tools, right? We need those chips.
That's absolutely true.
All right. Wonderful. That brings us to about the halfway mark on the show. Let's go ahead and give everybody a quick preview to your quick links page. So if you guys are joining us for the first time, thank you. Welcome. We are streaming live, so if you have any questions, throw them in the chat. We've got some goodies on here. I've thrown the link in the chat. This has got AJ's social links. We've got that free indicator suite. You're going to see a couple examples of those as we go through AJ's Pick of the Week, our speed round. We've got some more freebies. We've got a really wonderful daily workshop to get you into the mix of premium selling. Information about how you can join the overall Trading Trainer program. We've got some one-on-one coaching, a lot of good stuff. And AJ and the team, I know, are working diligently on some very cool, maybe not AI specific, but tools to help preview these signals and ideas that we discuss a little bit faster, more efficiently using an app. I know the options lookup tool is in its kind of version 1, but version 2, version 3 down the road are sounding very exciting. So if you guys watching haven't downloaded it, gotten access to it, head on over to that link. That information will be there. We've got AJ's speed round, or we've got AJ's Pick of the Week. We've got our speed round. Market's still near these lows here. We'll dig into some opportunities and see if we can find some winners for you. So sit tight, folks. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. Do we have any names from past shows that we want to review before we dig into your Pick of the Week?
I mean, Bath and Body Works.
Still
Bath and
crushing.
Body Works has been, we just had earnings yesterday, but Bath and Body Works has been that type of trade that just is the gift that keeps on giving. I mean, we bought it low. I think we bought it around 26 bucks. We sold premium around 34 bucks. We were able to cash out of that premium, within a week. We sold another 34 buck premium. It dropped down. We were able to go ahead and get rid of our protective put, roll it out. We actually made a profit on it despite being in it for about a month and a week, so about 5 weeks. We were waiting for the next opportunity to sell premium. We may be getting that today, which wouldn't be a bad idea because the cost basis is so low. So we might sell some premium, buy some more protective puts, and let it ride from there. But man, Bath and Body Works has been a textbook trade over the last, I would say, 2 months. I think we're up over 25%, and we've only had to do maybe 3 trades over the last 2 months. So Bath and Body Works, that when we recommended that one, I would have never thought that it was going to be such a wonderful trade for us.
Yeah, definitely not in that tech AI space unless
Nope.
maybe they are implementing a little bit, but it's not so susceptible to some of these movements that we've been seeing in these other industries. So the fans love the BBWI, Bed Bath and Body Works trade. This week you got your eyes on another B name. This is Bristol Myers Squibb, ticker symbol BMY. What's the setup? This is kind of like a pharmaceutical or chemicals, right?
Yeah, Bristol Myers Squibb is in the pharmaceutical there. Been one of the bigger pharmaceuticals. I like them in my portfolio almost all the time. They're boring, but at the same time, they're big money makers, and they're going to be a company that doesn't disappear overnight. Listen, this is what I want folks to know. So we got a signal last week. We got our follow through the next day on August 25th. Actually, we got the signal on Friday evening, right? And then Monday, we got our follow through. I don't want you to act on that. That would have told you to short Bristol Myers Squibb. If you did act on it, no problem, right? But here's what I want you to do. I want you to wait. And I know, discipline and patience, especially with you guys who are watching our show, doesn't come easy. But I want you to wait for the next bottom signal, which means that Bristol Myers Squibb, I'm expecting it to drop around 44 bucks and then give us a bottom signal. I want to buy some Bristol Myers Squibb. So I want you to just prepare on this. I want you to, have your mind on Bristol Myers Squibb, and I want you to look for a bottom. When you see that bottom, I want you to either buy lots of this stock in lots of 100 so that we could then do option trades against it, or there's a substitute option that I want you to look at. And I found this using our options lookup tool. So if you come over here, and you can get access to the tool at the same time that you sign up for our indicators. We'll give you access to the tool. So you can very easily find substitute options using the options lookup tool. We want to go far enough out in time so we don't have to worry about this thing expiring. So I'm actually going all the way out to June of next year. And I want to go so deep in the money that I have around 5% extrinsic value. And with our great price components add-on to this tool, you can tell exactly what percentage is intrinsic versus extrinsic value. I want less than or around 5% or less of extrinsic value. We call that premium value. A lot of people call it time value. So the option substitute would be a Bristol Myers Squibb June of next year expiration date, $35 call. And this thing is just a fraction of the price of the stock. It's only $12.53 a contract. So, or a option share. A contract would be 100 of these things. So, either one, whether you want to buy the stock and take advantage of the dividend, or whether you want to go ahead and just buy that substitute option at a huge discount, I want you to buy that when we hit that low price. And then once you've got that in your holding, either one of those two trades will act as your covering position. And as we swing back up and we get another one of these purple arrows on our fast MACD on VWAP, that's when you sell premium, buy protection, and start the whole income process. Bristol Myers Squibbs has been a huge portion of our portfolio here at Trading Trainer year in and year out, and we've been able to just milk the premiums out of that, month in and month out, and I want to set you up to do the same.
Awesome. So we'll revisit this one next week, maybe even the week after, because this might be in play for a couple of weeks here. So
Months.
AJ, months, even better. AJ's pick of the week: Bristol Myers Squibb, ticker symbol BMY. We've got some 3 interesting names here that I think are a little bit outside the box that the viewers want your input on, AJ. So let's dig right into it. The first name, Indy out of Chapel Hill, North Carolina, wants to know what's going on with Huntington Bancshares, ticker symbol HBAN. I'm going to look up what this company does.
I believe they're a mid-sized bank. Okay.
The bank share is throwing me off. Bank share.
So
yeah, it's just Huntington Bank.
Yep. Well, here's the scoop. It's trading between about 16 and 18 bucks, which is a great size channel. It's coming up to that level of resistance around $18. I'm going to wait with my indicator for that magenta arrow. When I get that, and it looks like end of day signals work very good with this particular symbol. So I don't even have to be watching this during the day. I'm just going to check every evening, sometime in the evening, for my magenta arrow, which means I got an end of day signal. If I get that magenta arrow, I'll try to trade it in the subsequent days. And so I'm looking for it to top out, and maybe you are too. So I would be fine if it topped out around $18, or if it goes a little higher, as high as $19, I'd be okay with. When it tops out and it gives me that follow-through signal, what do I want to do? I want to short this. I want to short either in lots of 100 shares, or let's use our options lookup tool and see if there is a substitute put option that might be a better fit for us than actually shorting the stock. I like buying the put options instead because, well, and I got to make sure I type in HBAN, the right ticker symbol, um, because when I short, when I buy put options, it's a cash trade versus a stock, shorting trade. So I don't need to have any special accounts or margin accounts or anything like that. I can use a normal cash account, and the put option is going to act just like the stock. When the stock goes down $1, the put option will go up $1. It'll be the same dollar, but it'll be leveraged and it'll be a cash trade. Okay, so let's start off looking at June. Again, I'm looking for that 5% number, and I think I found it right here. I'm looking at June. I could also look at the April of next year. Yeah, I could do either one. I kind of like the June one a little bit better, but just look for this around 5% or less number, and a little bit of open interest doesn't hurt. Small bid-ask spread. So I'm looking at this hunting. Oh, wait, I'm looking at the call. Change gears, AJ. Let's look over here at the put. I like this one, but it doesn't have the small bid-ask spread. I'd wind up going with this 22 if I was to go with anything, but let's see what the April says. I'm looking for this number to be, oh yeah. Okay, I changed my tune altogether. Let's look at this Huntington Bank, April of next year, $22 put. We've got 3.4% extrinsic value. We've got a 30-cent bid-ask spread. I mean, this is exactly what the doctor ordered. I don't see any open interest, but I can tell that the market makers are there because the bid-ask spread is so small. So I'm looking at this $22 put that doesn't expire until next April. That would be a great substitute for shorting the stock. So yeah, that's exactly what I would do. It doesn't look like I've got a purple arrow forming today, so I'll check in, like I said, every evening next week. Once I get my purple arrow, go for that $22 put that doesn't expire in April. Buy that thing as, whatever the risk is involved. Buy that many option contracts. Let it go up in value as this thing goes down. And when you find your bottom, sell put premium, buy protective calls, and then start the income generating cycle. These mid-side banks are good for that. So I think you're on to something.
All right. Huntington Bank, named Huntington Bank Share, ticker symbol HBAN. Moving on to our next name, from banking to lingerie. This is Carrie out of Columbus, Ohio, interested in Victoria's Secret, ticker symbol VSCO, a name that we've covered on the show a handful of times. Looks like earnings just came out.
Yeah, earnings came out. It looks like there was some excitement around it, and guess what? We're right back where we left off the day before earnings. So so I'm looking at this, and it looks like we are a sideways channeler. Maybe we've got some resistance around $22, $23. We've got some support around $18, $19. That's a great looking channel. It looks like before earnings, we got an end of day signal. Again, I'm using that fast MACD calculated on the volume weighted average price. I got a signal the evening of August 20th. It does look like I got follow through on August 21st. I can see how if you went ahead and shorted this stock, and then you shorted the stock, and then or bought that substitute put option that the next few days might have given you agita in your stomach because it just kind of stalled there. But this is where we create a trade plan with a bailout price, and then you just trade your plan, right? So we got an end of day signal right before earnings. Earnings day did not give us follow through on that signal. And then today, it looks like we're going to get an affirmation on our our initial signal from a few days ago. So I guess what you're asking me, Carrie, is did I make a mistake getting in, and should I have sold? No, you didn't make a mistake getting in. You did really well getting in, and now just trade your plan. Nothing has triggered you to actually sell. I know that you've probably been having some white knuckles, but the reason why we create a plan is so that we don't have to have white knuckles. We know exactly what's going to happen if we get bailed out, but you haven't gotten your bailout signal. Don't feel like you need to get nervous and bail out ahead of what your plan tells you to do. Just ride your plan. It looks like, there was a little bit of excitement ahead of earnings, and now earnings has passed and people are back to going like, hey, Victoria's Secret's at its high. I think it's time for us to take profits. So I don't think you did anything wrong. I don't think you should jump the gun and disregard your plan and sell your position. I think you should just be cool, be the disciplined trader, trade your plan as you have it written out, and just let this price drop now that earnings has passed. And as soon as you get, your next light blue signal down here around $18, $19, sell your put premium, buy your protective call, and start collecting your incomes. You did nothing wrong, unless, of course, you threw caution to the wind and threw your trade plan that you spent all this time creating out the window and decided to do something different than what the plan said.
Yeah, and that's what we're here for. We're here to help you come up with that plan, help you stick to that plan, talk you into the plan, keep you in and that's kind of the beauty of Trading Trainer and the community of other traders and investors that you have around to kind of help you work through some of these scenarios.
Be disciplined. I mean, it's funny. I get new traders all the time, Sip, and some of them come from a more aggressive trading background, and they want to trade, right? And they almost, it's like making them sit down and create a thorough trade plan the way that I do is almost like, but I just want to trade. I know, but create a very good trade plan. And then the next, difficulty that I have as, their mentor or, their source of reason is now that we spent all this time and spent all this teeth pulling to create this plan, getting them to stick to it and not just trust the hairs on the back of their neck, which have led them wrong leading up to this, to just do whatever. You spent all this wonderful time and analysis creating this plan. Stick to it. Do what the plan says. And, don't get worried about price action. Just whatever the plan says, trust it.
Yeah, having your risk and reward parameters kind of helps you work through that. Just, you have something in sight of what you want to reach, and then you kind of have something in the rear view that's like, well, if this goes against me, this is as much heat as I'm going to take. So that's Victoria's Secret. All right, moving on to our third and final name in our speed round today. Mike out of Sacramento, California, wants to know the scoop on Applied Optoelectronics, ticker symbol AAOI, which is a designer, manufacturer, and seller of fiber optic network products in the United States, Taiwan, and China.
It's boring, right? Even
boring.
Listening to you say that made me want to take a quick nap here in this Friday afternoon ahead of this trading holiday on Monday, right? Listen, earnings is in our back door. We've had a couple of confusing signals. We got a bottom. We did not get follow through. We did not get follow through again. The signal was reversed. The day after we got bottom, we didn't get follow through. We didn't get follow through. We got follow through here. And then we got confusing. Hopefully you followed your trade plan because you got a reversing signal after we already opened the trade. But then that was reversed the next day without follow through. So, it's one of those cases where you could have even gotten follow through. I have to look at the actual intraday data, but you might have gotten it on the 15th or the 18th. So either that Friday or that Monday. But then you had to stick to your plan, just like we were talking about Victoria's Secret. If you got, say you got in here at $24, and then over the next 2 days, you saw a price drop as low as $20.50, you'd have the urge to get back out of that. Even if your plan said, hey, your bailout is down here at $19.50, when you see the stock drop like that 2 days after you buy it, you can't help but want to just be like, and sell it. But the scoop is your plan says don't sell until you get to 1945. And sure enough, we didn't even get down to below 20 and it started to go back up. So I guess your question, and I'm just reading it because I just get the tickers, is, hey, if I got into it, what do I do now? You wait. This is where you just let it go, right? Here's the scoop. We expect it to actually reverse somewhere between 28 and 30. We're going to look for a magenta arrow with follow through somewhere between 28, 30, even if it goes up to 32. When you get that signal and you get the subsequent day follow through, you sell call premium. You buy your protective put. Your call premium is going to be a near term at the money option. So the strike price is going to get selected once you know where you're trading at. Your protective option is going to be somewhere down here, like 22 or 20. That's the protective option. You're going to go 3 to 6 months out. And then again, you just wait. You've basically installed a collar on your position. You've locked in your gains. You've locked in, your risk or your reward, and you let it time do its thing and you move your attention on to your next trade. This is going to, accumulate double-digit returns every month. You just have to do those little adjustments every time you get a reversal arrow. So just, again, I guess the theme of today for all of your hot seat picks here, the hot picks in the speed round, is you created this wonderful trade plan. Now trade your plan, stick to it, right?
Definitely. And the beautiful thing about options in, trading stocks is you have a lot of choices, right? Like there's going to be some names that are positioned a little bit better for opportunity. And then there's going to be others that you want to just kind of keep on the watch list and double check every once in a while. But that's the speed round there. Thank you guys for tuning in and getting those out to us. Hopefully that was helpful. AJ, you did mention that Monday is a holiday heading into, this is Labor Day weekend. So heading
the
into
official end of the summer doldrums.
So with that being said, post Labor Day, Tuesday on, we're going to be in September. September always tends to be a pretty wild month.
Volumes increase. And
what is your recommendation? What are you guiding your folks with? How do we want to leave people off heading into this wonderful weekend that I hope everybody gets a chance to enjoy?
Look for how you can hedge hedge the VIX, get that trade in place. So when you hedge the VIX, it means that you've got a break-even trade that, should something surprising happen in the market, will then, I usually have anywhere from 10 to 20% of my portfolio into this hedging trade. So 10 to 20% of my portfolio will most likely break even. But if something goes wrong, that 10 to 20% turns into 20 to 40% overnight. While, my other trades, they may or may not suffer, depending. Most of my trades don't suffer because I don't get into those stocks that would fall on news. But, this VIX hedging trade takes care of your portfolio when the proverbial poop hits the fan. And I'm recommending you make sure that trade is in place. We have, like we pointed out, we have that signal appearing on the VIX again, if you didn't get back in last Thursday. So, make sure that trade is in place. And then, right now, I'm as much as folks have this fear of missing out on swing trades, and they think that the market is queuing up another swing trade, I'm asking them to make sure that they've got our premium trades, like the ones we featured today, well stacked in their portfolio, because premium trades tend to do well when there's some tumultuousness in the market, so long as you pick those boring stocks that make you yawn, like Applied Optoelectronics, right? Boring when I was hearing you read the description, but that's the kind of stock we want, ones that are going to just be boring as they every month put double-digit gains in our bank account.
Yeah, and not really move on news or be so affected by the things going on in the market. Heading into a longer weekend, it's possible, right? We don't have that reactionary day when we come back from Monday, so who knows?
But Friday is going to be employment numbers next week. Remember, last time the employment numbers were not good, right? It even caused the head of that statistics department of the government to get fired because the numbers were not pleasing to Trump. So, and it's interesting because, again, if he wanted the Fed to lower rates, that's a great way, is to have low employment numbers. Then the Fed will react reactively and lower rates. So it's just interesting that the ego is overpowering. I already said my piece on that, but the scoop is we get employment numbers next Friday, and I expect next Friday to probably be some aggressive trading like it is today.
I agree. I think that's what a lot of the market's going to be looking for. And it's interesting how the connection between the economy and the employment situation, no one's really factoring in all these AI things where it's kind of hindering the employment situation because we're replacing a lot of work with tools. And so some companies are benefiting. Overall economy may not. I saw some pretty scary statistics about white males in their 20s and the unemployment rates with college degrees and stuff. And I'm like, well, welcome to the new world. Welcome to 2025, where anybody with an internet connection can, create something. So we've got an interesting future ahead of us, right? We'll be here taking advantage of it however we can, using these wonderful investment tools. If you're on the fence, if you haven't jumped in, if you know what an option is, but you don't know what to do, to head on over to our quick links page, to click on this register for a free workshop. That's going to be the best place for you to start. Otherwise, show some love on the socials, follow us, get that free indicator suite. I mean, every time AJ brings it up, I'm just surprised at how clean and how, simple it is to read and implement. So all the goodies are there. The link to that is in the chat. That's all I got from my end. AJ, any final words?
Got for me? Nope. Have a great holiday weekend, everybody. Take a minute to, discharge from the week.
That's right. All right, folks. Appreciate it. We'll see you next week. Stay safe, everybody.
Bye.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.